Hello, 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 everyone. Good afternoon. How is everyone doing after 9.1% inflation day? With a rally back and a massive junk rally. I'm not even going to throw Tesla in that. So, oh, yes. I was waiting for this afternoon. I was waiting because I got to all day long. Why are we rallying? Why are we rallying? Well, we should be down 300 points, 400 points, 500 points, whatever it is. What's going on? Well, that's what we're here to talk about. Hey, Dan Jet. Ken, 9% inflation and we rallied. There you go. See? Hey, Ken, I hope you had a wonderful tour. Are you back now at home? Hello, everyone. Curious to hear about today's analysis. Hello, Patrick. Who would have been buyers today? Hedge funds, retailers, institutional buyers, short covering. Well, there were some short squeezes going on today. There was a lot of moves into junk. What was your strongest sector? Anybody know what the strongest sector was today? Come on, come on. Anybody know that? And this is all you need to watch. This is why it's good to watch. This is why I do the sector analysis. It's why I put stuff out like this, because it's a good idea to glance in on this to know if this is real something that has legs or just something that the market can do anything. Keep that in mind. Just if the market was logical, it would be easy. And by the way, there was still a lot of retail buying junk. There was still a lot of junk being bought off of. I mean, the stuff I was hearing. Hey, they're gonna have to hike harder, but then look, the market's already priced in a one full rate hike. One full rate cut in first quarter of next year. If inflation is as sticky as it is, it's boy. If they're gonna start cutting already, we could see another spike in inflation again. Remember, this can take a long time to unwind. And it's again priced in a recession now, priced in rate sites. We're already focused on cheap money again. We want the cheap money and more QE. And what rallies on cheap money and more QE? Well, there you go. We will have another big leg down. Remember what I was talking about this morning. When you start getting into these, especially earnings cycles, where you get lower guidance, bad earnings reports, and it's day after day after day. And that might be starting with this earnings cycle right now. If not this one, definitely the next one. But you know what? Because that provides the constant downward pressure. And that's where you get earnings compression, and that's where you get your PE ratios going back up. All right. And that's where, remember I said today, what was that point I made? What was the point I made this morning? What was the key estimate? Then we'll get back to this. What was that key level I talked about? 37.50, 37.50. Didn't I talk about that had to break, and we did not break it. And I talked about that being major support. 1, 2, little 3, 4. We can now count it 4 to 5. When this level breaks, watch out below. Until that level breaks, can't get overly bearish because you can get stupid, and there is still a lot of stupid in the market. And this is what you see. You have people in denial. They think it's going to go back to the way it was. Again, I know retail people were buying today. It was great. They were buying ARK, literally, because, we're going back to the QE within a few months. Literally, so let's buy ARK. I can't make this up. So, do you think this is over yet? I don't. Do you think we're near a bottom? I don't. Can you get stupid rallies? Yes, you can. You can get stupid rallies all day long. You can even get rip your face off rallies. So don't get confused. That's why you got to analyze price action. And don't think about the markets logically. Look for the patterns. Look for the setups. All right? And trade those. Don't trade what you think should happen. You have to trade what is happening. So I hope that makes sense. We could even start a big leg down before 2 to 3 weeks, Sashi. I mean, we have to wait for either the break of some of these key levels or we have to wait for another major topping pattern. Hey, Dr. Michael. Good afternoon, George. Hello, Wavy. ARK, yes, see, Christoph, ARK. Let's buy the ARK. Let's all jump on the ARK. Let's go. 9.1 celebration party. Woohoo! We got PPI tomorrow, by the way. Remember, tomorrow morning, another number. PPI, we'll have to see if that comes in. If that comes in a little better, maybe we get a continued rally. Who knows? Who knows? I just know where the tipping point to getting bearish is. We get more Fed speak today. I mean, tomorrow. I'll get to some more comments and questions in a second. Pretty mixed day. Google down, Apple, Microsoft down a bit, but Amazon still with Prime Day going on, and Tesla. You know, why not? Tesla's probably going to be majorly screwed with the Twitter stuff. But hey, let's just rally that with it. Let's all buy calls and Tesla and juice it up. That's the kind of day it was. But overall, sort of a mixed bag. Some stuff up, some stuff down. By the way, FOMC, look at this. You want to talk about this. Now, again, if they're going to do this, who did that this afternoon, though, said it was, who put pretty much everything, I forgot, Bostic said everything was on the table. Okay, everything was on the table, which could be hinting that there could be a full 100 basis point rate hike, and that's just getting priced in that a 78% level. And just for, we're still in negative gamma territory, so you can still get insane moves. Let's see. Let's get to some more people. Good afternoon, Davey. Rams Fall. You're a gem, Mike. Thanks for everything you do for us. Please to be a supporter of YouTube's best technical analysis channel. Yes, make sure you don't put T and A. Just TA. Technical analysis. Thank you very much, Rams of Fall. Another wonderful supporter of the channel. Rumors China, well, they're having major issues in their housing and construction relating to housing, and it's starting to unravel pretty rapidly over there. And I bet you they're going to have a lot of social unrest due to that. Also, remember, crypto's holding a lot of, especially stuff like Tether, a lot of junk China paper. So watch for the fallout continuing to unravel in the crypto market. Just when the Fed's base book was published at 2 p.m., the market sold off. US dollar, what was that about? Oh, well, the beige book was pretty showing that, yeah, recessionary fears are already here, and that inflation is much more entrenched across a broad spectrum, and hiring is definitely slowing and job openings are slowing. All right. But we had again, it was just a counteraction for the pretty rally, but this is all, we're still in insane market conditions. All right, when it's stop buying the junk, then we will be closer to a bottom. Prime Day is currently a disappointment. Canada, yes, Canada did hike 100 basis points today. They were very aggressive, so they've already set the stage for, man. Boy, you know what? The ECB is going to be so far behind the curve, it's going to be scary. Yeah, the Canada's highest rate hike in 30 years. You're already at 2.5, and Wavy, you're in Toronto, right? So you're already, Wavy's the pulse of Canada for us. Just like Christoph is one of the pulses in Europe. If bank runs in China, that's already started, and it's just going to get worse. By the way, nothing much after the close, but tomorrow, before the open, this is also going to set the stage. Besides those PPI numbers, we got JP Morgan, we got Morgan Stanley. All right, that really kicks off, and then you got a couple minor like First Republic Bank, but that's the big stuff I'm focused on tomorrow. So we got PPI and those things, and I don't have a lot of great setups. If you want to look at those charts, we can. All right. Yeah, yes, Toronto prices don't go down. You know, it's going to be interesting to see what the ripple effect the Canadian Central Bank has on real estate prices. Yes, we will look at JPM. As long as you don't make any bad jokes, William, I will look at JPM for you. All right, let me see here. By the way, you know what? If you're like Rams of Fall and a wonderful supporter of the channel, please do, if you have not yet subscribed, do subscribe, ring that bell, and hit that thumbs up. And thank you for, I really appreciate the people who take the time, even the 30 seconds to come back and after the live stream, leave a comment, even if it's just thank you. I really do. Those are some of the also great supporters of the channel. If you don't already do that, please take that 30 seconds, because that's how we get more and more people joining live stream. Have you seen how many more people are signing up in the morning live stream? So keep that in mind. All right. All right. Let's get right to it. By the way, just little minor thing. You have this little double on the 15-minute triggering. So I'm watching for a continued pullback at least, for a while into the Asian session, but it could be choppy, and that just takes us back to not even to the lows, but that's only a 15-minute pattern. So that's just minor stuff. I'm going to see how it reacts at some of these levels. You also have that in the NASDAQ, and both of them have triggered on that 15-minute basis. One of the things I wanted to jump on first, though, remember consumer discretionary. Look at this. Consumer discretionary. If you're going into or already in a recession, do you think consumer discretionary makes any sense to be up like this? That doesn't to me, but that's why I'm talking about what kind of rally this was. You also had stuff. See, that's why you check on the sectors also, because you have stuff like ARC. ARC also a nice bounce, a little bit of a sell off, but a nice bounce. You also have, if you look at your heat maps, I mean, look at some of this stuff, like pets. All right, yeah, and stuff got started to get sell down a little end of day, but I mean, this was up huge today. TDZ Holdings. I mean, it's a joke. Here's another one. Here's another one. Where is it? Where did it? It almost fell off with the end of day little collapse. But Stitch Fix, really? Uh, mail, sending your mail clothing through the mail. That really up 13%. It was up even higher intraday. This thing's barely teeting or holding on to stuff. You can see this. Where's that? Where's that P to E? Oh, guess what? They don't make any money. So that's the kind of stuff we saw today. Besides, there was a little bit of recovery in some of the mega caps getting juiced higher. So don't like Nvidia. Now we do. We'll have to glance more at Nvidia, but there was just a stuff with some of these overdone stocks. And again, we're gonna build chip manufacturing in this country. I don't even want to. This is just insane. All right. So what am I watching for now? The key level. I'm going to reiterate the key level. 3750. We start breaking below that, especially with momentum. We're going to retest the lows. There's a ton of stops below this level. We need some momentum because I watch for a little fake out move. That's where I like to break and a retest rollover just to make sure we don't get that fake out move. But that's it to the downside. That's the key level. This little double on that 15 minutes, just a minor level going into Asia and Europe. Where do I start? So I have the harmonics on here from the highs back on July 8th to the lows set today. Look at the 50% level. Also lining up with this resistance shelf. So this is where I gotta play a short-term bull case above 38.36, and then my next target area, the 62.5, especially on the closing basis, 38.58. But we have right in front of there, right behind there, this little thing. So I have a great target zone. And then if we get at least a key close above 38.58 area, then I have to watch that it could pop back to these short-term highs. So that's where we sit. Cycles still aren't at the bottom on the daily, but could we get another bottom move up and this holds? And then we get a rotation back up. By the way, you get a close tomorrow above today's high. It is a bullish entry for another short-term pop-up with cycles possibly bottoming and rolling back up and weekly at the top. But I need to, in order to play for a longer-term little pop, I need a stronger entry signal than just a break above some key levels. All right, let's see. Hey, Lauren, how you doing? Okay. So that's it. We got to still analyze both sides of this. Now, my key area on the NASDAQ, which it didn't get down to today, was about this 11,400. Bottom, bottom, dot, bottom, and buyers were even step in front of that area. And that has that little double I already talked about. So those are the levels I am watching. But again, you have that 50% level. So this highs back on the 8th to the lows today. Snap back to that 50% level and stalling out. And we also had the prior resistance there. So that's going to be, start getting above 11,845, 11,850. I'll just go with 11,850. Then I'm targeting. Let me reverse this, by the way. I have it the wrong way. Sorry about that. I drew it backwards. It doesn't really matter because it's harmonics, but I just want to show it for people accurately. The 50% level, of course, is going to stay the same. But now, remember, like when it was drawn the other way, the 37.5 was really the 62.5 because they're increments that are the same. But this 62.5, so 11,938 area, 938.50, a close above that, start targeting the higher prices. That's also this key resistance. So now I got some really nice levels. On the pullback move, the area I'm really focused on is 11,662 to see what happens. We got that harmonic, the second target on the double and the harmonic cluster there. We break down below that, 11,572, and then the return to the low prices. But those are how I'm got my setups now. Going in, let's see. Lauren is looking for a rollover 600 550s. So we'll take a look at a 1 hour double top on Tesla in a bit. Dow, and not even a pattern here. Again, this is just a crap pattern. So it was just the key level here, 30,700 roughly. If we break down 30,550, 30,540 is my support. My breakout level is roughly right above 30,950. And then I'll start targeting the higher harmonics. Russell, again, there's nothing going on here. I'm bumping my breakdown level just a little lower, about 1716. We break below there. I'm going to watch for the retest of the lows. We break above right there, 1736. I'm going to watch for a retest of this high area. By the way, this is off the table. Yeah, it's the most inverted since 2000. That is correct. We will peek at the curve in a second. I was going to get to that. Thank you. We still have this very short term. It triggered like on the 15-minute, but not on the, it's still in the play on an hourly basis. And I'm watching for this hour trigger with crude. What's interesting is crude's still holding up even with the recessionary stuff. So I'm keeping a close eye on this, but I need that close below 90, hourly close above 97.37. What else? Let's take a look at notes, because notes, by the way, on the 1 hour, you can see it on the 4 hour basis. The targets don't work on the 4 hour or the daily. Why am I keeping them on there? Because the first target roughly lines up and it's easy for me to spot with this 12.5% harmonic. Then the next target just misses by a bit. So my next target area is about 120.01 to 120.03. I'm still watching even with this move today. This you can get a, there could be a lot of work to do to build another shoulder in here. So even if we pull down again, with this, taking this with a grain of salt, we'll pull down and even rotating back up. But I'm going to be watching this to continue higher tomorrow and really build out that pattern. So that's what I'm keeping an eye on there. Dollar index actually got a little more support without even pulling back to this key level here, pulling back that rotation zone. So if we start breaking below now down about 107.36, I'm watching for that bigger pullback towards that daily rotation zone and about 106.65 to the prior harmonic project of 107.15. The VIX, again, pretty decent reversal back down here. Even with this move this morning, just not a lot of fear creeping in and a quick reversal there. So we'll take a look at the VIX tomorrow morning. Euro, US dollar, still trying to find this little support. This, by the way, this was a valid double that was triggered on a 4-hour basis. Okay. So that's what I'm keeping an eye on. It was triggered right there. And actually, I hate when the trigger on that 4-hour basis, even on the 1-hour basis, went to the stop reduction at the first time, right when it triggered. I really dislike that pattern. But at this point, you gotta, at this point, you gotta raise the stop on it. So the stop level on a closing basis, and I want a 4-hour closing basis below 10044 or 45. But that officially did trigger. What's interesting, if we do get that continued pullback, that target on that double is right. The pullback in the dollar index, the target on the double for the euro, remember that makes up over 50% of the dollar index, is right in front of the daily rotation zone, where I'd start watching for another rotation back down to really gauge then a true potential bottoming pattern in the euro. Bitcoin with the trying to get a little snapback rally, but keep an eye on this also, because with what we talked about with the China tether and everything, we could see another substantial push lower if it cannot get back into this channel. Tesla. So again, long term, I'm very, very bearish on Bitcoin. It's just getting the timing right. Tesla, you had that junk rally. This is sloppy on the 1-hour, but you can see it pretty good on that 15-minute. So this is the play, and it is triggered on that 15-minute. So this is the play for tomorrow morning, with the downside targets of 701.80 and about 698.35. Again, we got the screaming rip your face off junk Tesla rally today. But that's the key lower stuff. Again, not doing much. We could, again, watching for that close below that 62.5 to get really bearish again, which we did not. We had that gap open, immediately screaming up to fill the gap. So this is still the key area I'm watching. This about 687 area to get more bearish to the downside. Again, sometimes these bear markets are very hard to time on bearish bets. That's why it's difficult to play short-term option positions. Because if you don't get the timing exactly right, your theta can eat you alive. Now, long-term positions is easy. You're playing something really far out, like 3 to 6 months out, fine. Your theta doesn't eat you alive yet. Where else do we sit? Let's go to the. Let's go. Here's the yield curve. Look at this. Look at this. Oh, come on. There we go. Let me get to a little shorter term chart here. Shorter term charts on these. So here's your 10 3-month is still positive. But then we go down from there. Look at this. The 10 2-year ending at negative 21 basis points all the way down to minus 24 basis points. You have the 10 5-year at ending at essentially 9 basis points, but at one point this was all the way back down to about 11.5 basis points negative. You have the 10-7 ending at negative 0.8 or negative 8 basis points. The 5-2s, negative 12 basis points. And then you get into your deep end, the 30-20s at negative 28 basis points. So your yield curve is just brutally inverted now. I mean, and this is the most it's been inverted. I don't even know how far back I have dated. Let's see. This is the most it's been inverted since at least on the 10-2s since 07. Oh, good. We have Tom stock. Welcome back. SPY was bullish today. Bad CPI can't bring it down. We hit Spider 400 Friday. Well, again, I already talked. We could get that pop rally, but I can't do that until we get to higher price action. There's too many bulls out there still. All right. What else? What else? What else? I'm just thinking, what else do we want to talk about? Oh, JP Morgan. William, you were very quiet. JP Morgan, this is not a double because it's not reversing a big enough move. This was one of my key levels, and we're trading right against it right now. The only bullish, I'm actually, even if we get a pop up in this, going to watch for the gap fill in banks. So there's no play for me going into it with this. If we sustain, get a pop, and it gaps above about 115, and that can hold, I'll then watch for the move to 118. Other than that, if it pops above that and rolls back down, I'm watching for the gap fill. If we break, because we're already at the key level, which was one of the areas we just tested today, 110.65, we gap down. My next target is 107.78. So, but there's just no great setup. And longer term, again, remember, always judge your longer term stuff, because even if you get the pop play, look where the weekly rotation zone is. It's then just set up for another rotation back down. Banks aren't anywhere out of the woods yet. Hello, Waka Waka. So that's where we sit with that. And then we also have Morgan Stanley. Morgan Stanley, this is with this other rotation down. That's just a complete disaster. Morgan Stanley, the only thing I'm watching is a pop above about 77.50. And if 77.50 holds, then I'll watch for a return to the 50 area. If not, then I'm watching for the gap fill play. To the downside on this is where you want to use your short-term reverse harmonics. And first, I mean, we'd have to have a pretty substantial gap. My first area I'd target is 72.50, and then you break below that 71.11 and 69.98. So but there's not a lot of great setups. You see everything coiling into, and then we'll probably get gap plays off these earnings reports. But then everything can still go, even if you have strong earnings and the market sells off with PPI. You can have that. You could have weak earnings that gap down. The market rallies with PPI, and you could get a gap fill play to the upside. That's why there's no position for me going into it. Anything else? Just taking a glance at Amazon. There's no great setups in Amazon either. If we do get theoretically a close above yesterday's high, it's for a short-term pop back to the 50. That's about it. So other than that, I don't have any great setups on Amazon besides, again, consumer discretionary was getting bought up today. And Amazon's got a big consumer discretionary component. Anything else? Anything else anybody wants to look at right now? Let's peek in on gold. Little reversal, but no strong pattern. By the way, that double turned into not a double. This, in order for me to get anything going with gold, we got to get at least a close above about 1770. Yeah, CPI will. I actually agree with that statement. I disagree with that statement, though. You know, even if CPI is lower, let's say next month it prints at 8.5, and then the following months it prints at 7.9. That's still way too high. And we're still in tightening with consumer and earnings compression. So, yeah, Kramer said we bottomed today, so then we did not bottom. Sure, we can take a look at the spiders. Royal Palms. Again, the spiders I hope everybody knows with how to do that gap play. Again, I'll reiterate it for those who are newer here. what you want to do is use your harmonics. By the way, this is a really nice double off of that. And I'll show you that with the gap play. So you get the close. You put your harmonics on here from the prior closing, not the high, the prior closing price down to whatever made the low of the day. And you watch first for the reactionary move at the between the 50 and the 62.5, which you got the reactionary move. And then you had you get the close above the 62.5, and that's when you target the full gap fill play, because that's statistically what works. And the double was using the conservative targets. Even if you went with the aggressive targets, you can see stopping right there. The conservative targets, just because of trying to come out of that oversold condition with the rally, and that was just above the gap fill play. So I did favor the conservative targets on there, but you can see both of them if you went with the aggressive, how that played out. But that's how you play the gap, and that was the double. So those were your setups in the spiders today. You want your key levels to watch for tomorrow. I did bump it down just slightly, but you start getting below there about 378, tipping back to the some lower price action down there, then retesting the potential lows from today. And what really confirms it, you start getting at least a 15-minute close below about 377.40. To the upside, can't get super bullish until you start breaking above about 381.63. So that's the breakout and breakdown levels going into tomorrow. If it sits in this range, there's nothing but chop. You are just the ultimate bull, Tom stock. You are, I will give you that. The ultimate bull. By the way, you have major resistance if you're looking at the longer term. Your harmonics coming in at 395 roughly with the 50. So there you go. So if it does, if you eventually get that pop play, that's the key thing to watch for any long-term structured trades. And the major breakdown zone, remember I talked about it on the S&P, but you're one of your major breakdown zones on the spiders is about 372.50 area. 372.60, 372.50. You can see the multiple bottoms in there. You start breaking below there, and then the target is 370.25, and then it's the gap fill play to the downside. So that's your longer term to the downside play. And again, with the Qs, just for the people who want the Qs, again, there wasn't a double in the Qs, but here was what you wanted to do. Remember, you put up, you got some momentum right off the open. Let me show you this too for the newer people. First, you got the momentum off the open. You put on your harmonics and watch for either you're watching for that pullback to the, if you get the close below the 62.5, then you watch for that pullback and the potential double. If you get the reversal, then you got to go with the reversal between the 50 and the 62.5, and that's the breakout play. Then you put on your harmonics the other way from the close for the gap fill. And you also see on this momentum, you got the close above the 62.5. So when I see something like this, if you start to get that pullback, that's where I showed you the harmonics the other way, and that was the for the pullback rotation move higher, because you got the close above that 62.5 right here. Statistically, you favor the gap fill play, and you got the gap fill play. And you got to enter it on, again, you got to enter it on the pullback. This is a key pullback area, 50 to 62.5. Now, I've covered before, if you have something that just bases at the top here and you don't get the pullback, then it's just a breakout play to the upside. I did not buy myself a Roku. I have a Roku. I think I have two of them. I haven't turned on my Roku. I pretty much only turn on my Apple TV. I got Apple TVs on all my OLED TVs. That's just my go-to device. Is my Apple TV. I don't use my Roku. You know, so I think Roku, sell Roku because Mike doesn't use Roku. All right, so that was the little play in there. I hope that helps in that little teaching moment. By the way, you don't want to trigger when you have this kind of move up. Yes, it was a technical close on a green candle above the 62.5. You don't want to use that for the play. You want a red candle to trigger it. You don't want a reversal play that does not test out well. So I'd be watching again for your close back below 283.65 on a red candle, not on a gap fill green candle. That would then allude to lower prices to the upside. If you want to reverse the harmonics, your key thing you're looking for bullish mode tomorrow, minor bullish mode. Remember, you can reverse between the 50 and the 62.5, but you get minor bullish mode above 288.42 to target this 290.50 area. And then you get a close above 290.50, at least on a 15-minute basis. Then I would be targeting the upside. You do have a gap left behind, and remember, statistically, you favor the 87.5, coming in about 294.65, and right above that, you have the gap fill. So that is your potential upside and downside plays for tomorrow. That's what's so handy about learning to use these levels, because you can map out a roadmap ahead of time for both upside and downside, shorter term, to even some of these could even turn into a couple day plays. Hope that makes sense to everybody. Let's see before I wrap this up. Christoph, to lift the spirits, issues we're having in Europe. 1, war. 2, inflation heating up. 3, debt crisis looming. Well, whose spirits are these lifting? Christoph, they're not lifting my spirits. I don't want anything bad to happen in Europe. 4, lack of natural gas for winter. That's a huge issue. 5, worsening pandemic healthcare crisis. 6, not enough people to run basic infrastructure like airports, etc., etc. Well, Christoph, this isn't lifting people's spirits. 7, the ECB so far behind the curve with rate hikes, it's going to be a disaster in my book for inflation in Europe, even with recession. Please tell me you worsened my spirits, Christoph, but thank you for the insight from Europe. I knew about some of those things, like, war is obvious. Inflation heating up, we've talked about that. Debt crisis, with certain, because of the way the debt is structured in the European Union, it could get really interesting for certain countries quickly. And Spain's inflation numbers were atrocious. Germany's was in line, was it not, Christoph? That came in with expectations, but Spain was like over 10%, if I remember correctly. Yeah, and that lack of natural gas for the winter, horrible situation. And Russia's got it by the balls right there. If they don't turn back on the pipeline or have mysterious breakdowns in infrastructure with the pipeline going into especially winter, gonna get really interesting. Did not know not enough people to run basic infrastructure like airports. That one was not on my list. And worsening pandemic healthcare crisis. Well, is the pandemic really getting worse over there? All right. So thanks, Christoph. Christoph with the little. How does that go? Or is that supposed to make us feel better because Europe's having worse problems? I just don't know. I don't want anybody to have problems. Let's just try to get out of these market and these conditions alive without having our portfolios destroyed and without inflation crushing us over the next year. With that, I hope everyone has a wonderful evening. Again, I'll be on tomorrow 30 minutes after the PPI comes out to help fine tune the levels going tomorrow. We're still in tactical trading mode. We have higher COVID cases in Germany than at any stage last year. Wow. And there is that new variant that pretty much bypasses everything, even if you've had it before. So that's just fabulous news. I didn't know about that. Hospitals are filling up. Well, we just have a fabulous. Let's just all pack it in. We'll just take the rest of the year off. Maybe the rest of the we could maybe take off the next few years until 2025. What time is the PPI? PPI is at 7:30. Okay? 7:30 Central Time. Why do I go off Central Time? Not only do I live in Central Time, I focus on a lot with the futures, and the CME is located in Chicago. So a lot of these numbers are with the CME are geared off Central Time. So this is 7:30. You got PPI. You also have I didn't stress. You have continuing jobless claims. By the way, another major thing, and please write this number down. Please write this number down. I'm looking for my piece of paper with it written down. Hold on. I'm going to give you a big major tipping point number you're going to want to watch for jobless claims. I'm not saying this is going to hit tomorrow. That's why you're going to want to write this down. But 1456K, you hit that, we're in a guaranteed recession. So if you get continuing jobless claims at 1456K, and that's based off a percentage increase from the lows that printed earlier, then we're pretty much in a guaranteed recession. Write that number down. You're going to want to watch that pretty much every number that comes out. Hope everybody's writing that down. Again, 1456K. Christoph, I'm just having fun with you, but I'm really sorry all that's going on. You're welcome, Royal Palms. Hey, NASCAR and out. Thanks for being here. Well, Euro was below the dollar for a little bit, but back popping above there. It was at parity for a bit. See, it's not at parity right now. It's a little pop up. I'm still watching. I think we will hit that 98 something though before this is all over. But we had that short-term double in the euro to watch how that plays out. All right. With that, again, thank you everyone for being here. If you are new, please do consider subscribing. And longer term people, please come back, leave some comments to get this in wider distribution. Thanks for as many people sticking around for the whole live stream as did. We'll also look at the earnings tomorrow and see if there will be any plays post earnings in those couple stocks. I will see you then. Bye for now.